Question 1. Topic: Life insurance. Policy provisions, options, and riders. Which of the following statements regarding life insurance policy loans is true? A. The insurer can cancel the policy if the policyholder takes out loan and fails to repay it within year. B. Policy loans are only available on term life insurance policies. C. If policy loan plus interest exceeds the policy's cash value, the insurer may terminate the policy. D. The policyholder must pay back policy loan within 5 years or the policy will lapse. Answer: C. If a policy loan plus interest exceeds the policy's cash value, the insurer may terminate the policy. Explanation: Life insurance policy loans are available on permanent life insurance policies with cash value component e.g. whole life and universal life, not term life policies. Policyholders can borrow against the cash value of their policies. However, if the loan amount plus accrued interest exceeds the available cash value, the policy can lapse. This is common provision in most life insurance policies to protect insurers from excessive liability. Incorrect options. A. Incorrect. The insurer cannot cancel policy solely because policyholder takes out loan. B. Incorrect. Term life insurance does not accumulate cash value and does not offer policy loans. D. Incorrect. There is no mandatory timeline for repaying policy loans. The policy remains active as long as a loan does not exceed the cash value. Question 2. Scenario-based. Topic: New Mexico-specific regulations. Licensing regulations. Maria Diaz recently moved to New Mexico and wants to apply for resident producer license. She previously held an insurance producer license in Texas. She wants to know if her Texas license will allow her to bypass the exam requirement in New Mexico. What should Maria do to comply with New Mexico licensing regulations? A. Apply for New Mexico non-resident producer license without any further requirements. B. Submit proof of her Texas license, complete an application, and pay the required fees to obtain resident producer license in New Mexico without taking the exam. C. Surrender her Texas license, apply for New Mexico resident license, and take the New Mexico producer exam. D. Wait 6 months after surrendering her Texas license before applying for New Mexico resident license. Answer: B. Submit proof of her Texas license, complete an application, and pay the required fees to obtain a resident producer license in New Mexico without taking the exam. Explanation: New Mexico offers reciprocity for producers who are licensed in good standing in another state. Maria can obtain a New Mexico resident producer license without taking the exam by providing proof of her Texas license. This provision is intended to streamline the licensing process for professionals moving between states. Incorrect options. A. Incorrect. Non-resident licenses are for individuals who remain residents of another state but conduct business in New Mexico. Maria is applying for a resident license. C. Incorrect. There is no need to retake the producer exam if Maria's Texas license is valid. D. Incorrect. There is no waiting period after surrendering an out-of-state license before applying for resident license in New Mexico. Question 3. Topic: Property insurance. Basic concepts: actual cash value versus replacement cost. Homeowner has property insurance policy with replacement cost provision. If the homeowner's property suffers partial loss, how will the insurer compensate the policyholder? A. The insurer will pay the actual cash value of the damaged property, accounting for depreciation. B. The insurer will pay the full replacement cost without considering depreciation, but only if the policyholder actually repairs or replaces the property. C. The insurer will pay the market value of the property at the time of loss. D. The insurer will pay the replacement cost immediately without any conditions. Answer: B. The insurer will pay the full replacement cost without considering depreciation, but only if the policyholder actually repairs or replaces the property. Explanation: a replacement cost policy provides compensation for losses based on the cost to replace the damaged property without depreciation. However, insurers often require the policyholder to repair or replace the property before the full replacement cost is paid. If the policyholder does not repair or replace the property, the settlement may default to actual cash value (ACV), which accounts for depreciation. Incorrect options. A. Incorrect. Actual cash value considers depreciation, but replacement cost policies do not. C. Incorrect. Market value is not used in property insurance settlements. D. Incorrect. Insurers typically require proof of repairs or replacements before paying out the full replacement cost. Question 4. Topic: Insurance regulation. Producers' fiduciary responsibilities. Which of the following actions by licensed insurance producer in New Mexico would be considered breach of fiduciary duty? A. Depositing client premium payments into separate trust account. B. Using client funds to cover personal expenses before remitting them to the insurer. C. Maintaining accurate records of all premium transactions for at least 3 years. D. Remitting collected premiums to the insurer within the required time frame. Answer: B. Using client funds to cover personal expenses before remitting them to the insurer. Explanation: producers act as fiduciaries when handling client funds, meaning they must act in the best interests of their clients and insurers. Misappropriating client funds, such as using them for personal expenses, is a serious breach of fiduciary duty and can result in license revocation and criminal charges. Incorrect options: A. Incorrect. Properly depositing premiums into a separate trust account is required by law. C. Incorrect. Maintaining accurate records is a legal requirement. D. Incorrect. Timely remittance of premiums is a core duty of insurance producers. Question 5. Topic: Health insurance. Medicare and Medicaid overview. Which of the following individuals would most likely qualify for Medicaid coverage in New Mexico? A 45-year-old employed individual with no children earning $70,000 annually. B. 32-year-old single parent with an income below the federal poverty level. C. 60-year-old individual enrolled in Medicare Advantage plan. D. 25-year-old full-time student with private health insurance coverage through their employer. Answer: B. A 32-year-old single parent with an income below the federal poverty level. Explanation: Medicaid is a state and federally funded program that provides health coverage to low-income individuals and families, particularly those with dependent children, pregnant women, and individuals with disabilities. Eligibility is based on income levels relative to the federal poverty level of PL. Incorrect options: A. Incorrect. An income of $70,000 is too high for Medicaid eligibility. C. Incorrect. Medicare and Medicaid are separate programs, though some individuals may qualify for dual eligibility. D. Incorrect. Full-time students with employer-sponsored health insurance are unlikely to qualify for Medicaid. Question 6. Topic: Property insurance. Homeowners insurance. Which of the following perils would typically be excluded from standard homeowners insurance policy? A. Fire. B. Theft. C. Earthquake. D. Windstorm. Answer: C. Earthquake. Explanation: a standard homeowners insurance policy HO3 typically covers fire, theft, and windstorm damage. However, earthquakes and floods are generally excluded and require the purchase of separate endorsements or policies. Incorrect options: A. Incorrect. Fire is a covered peril under most homeowners policies. B. Incorrect. Theft is a covered peril. D. Incorrect. Windstorm damage is covered under standard policies unless exclusions apply in certain high-risk areas. Question 7. Scenario-based. Topic: Ethics and professionalism. Misrepresentation and fraud. James Walters is licensed insurance producer in New Mexico. During meeting with potential client, James tells the client that whole life insurance policy will double in value within 5 years, even though he knows this is unlikely. The client agrees to purchase the policy based on this information. What unethical practice did James engage in? A. Twisting. B. Churning. C. Misrepresentation. D. Rebidding. Answer: C. Misrepresentation. Explanation: misrepresentation occurs when a producer provides false or misleading information about an insurance product to induce a sale. In this case, James knowingly made an unrealistic promise about the policy's value growth, which constitutes misrepresentation. This is violation of New Mexico insurance laws and can result in disciplinary action. Incorrect options: A. Incorrect. Twisting involves persuading client to replace an existing policy with new one through deceptive practices. B. Incorrect. Churning occurs when producer replaces policies within the same insurer to generate commissions. D. Incorrect. Rebating involves offering unauthorized incentives to client to induce a. Question 8. Topic: Casualty insurance. Liability basics. Which of the following best describes strict liability in the context of insurance? A. Liability that arises only when negligence is proven. B. Liability imposed by law regardless of fault or negligence. C. Liability that applies only to professionals, such as doctors and lawyers. D. Liability that applies to intentional acts only. Answer: B. Liability imposed by law regardless of fault or negligence. Explanation: strict liability is a legal doctrine that holds individuals or businesses liable for damages caused by their activities or products, regardless of fault or negligence. This is often applied in cases involving dangerous activities or defective products. The injured party does not need to prove negligence to receive compensation. Incorrect options. A. Incorrect. Negligence does not need to be proven in strict liability cases. C. Incorrect. Strict liability is not limited to professionals. D. Incorrect. Strict liability applies to unintentional acts as well. Question 9. Topic: Claims process. Unfair claims settlement practices. Which of the following would be considered an unfair claims settlement practice under New Mexico law? A. Denying claim within 48 hours of receiving the claim report. B. Requiring proof of loss before processing claim. C. Failing to provide reasonable explanation for the denial of claim. D. Offering settlement that is lower than the policy limits. Answer: C. Failing to provide a reasonable explanation for the denial of a claim. Explanation. Under New Mexico's Unfair Claims Settlement Practices Act, insurers must provide prompt and accurate communication with policyholders regarding claims decisions. Failing to provide reasonable explanation for claim denial is violation of this law. Insurers must explain the specific policy provisions that led to denial. Incorrect options. A. Incorrect. Denying claim promptly is not inherently unfair if the insurer has valid reason. B. Incorrect. Requiring proof of loss is standard part of the claims process. D. Incorrect. Offering low settlement is not necessarily unfair unless it is deceptive or unreasonable. Question 10. Topic: General insurance principles. Elements of insurable risks. Which of the following risks would be insurable under typical insurance policy? A. Business owner betting on the outcome of sporting event. B. Homeowners seeking coverage for wear and tear on their property. C. Car owner purchasing coverage for accidental damages to their vehicle. D. Person seeking insurance for financial losses from stock market investments. Answer: C. A car owner purchasing coverage for accidental damages to their vehicle. Explanation: insurable risks must meet specific criteria, including being pure risks involving only the possibility of loss and fortuitous accidental. Purchasing auto insurance to cover accidental damages meets these criteria. Speculative risks, such as gambling or investing, are generally uninsurable. Incorrect options. A. Incorrect. Betting on sports is a speculative risk, not an insurable one. B. Incorrect. Wear and tear is considered normal maintenance, not an insurable risk. D. Incorrect. Stock market investments are speculative risks. Question 11. Topic: Insurance contracts. Legal concepts. Which of the following elements is not required for an insurance contract to be legally binding? A. Offer and acceptance. B. Legal purpose. C. Insurable interest. D. Profit motive. Answer: D. Profit motive. Explanation: an insurance contract must have the following essential elements to be legally binding: offer and acceptance, legal purpose, and insurable interest. Profit motive is irrelevant to the formation of an insurance contract. Insurance contracts are designed to indemnify the insured, not to generate profit for them. Question 12. Topic: Property insurance. Replacement cost versus an actual cash value. Homeowner's property was damaged in fire. That the replacement cost of the damaged property is $10,000, but the actual cash value after depreciation is $7,000. If the homeowner's policy covers property on replacement cost basis, how much will the insurer pay? A. $5,000. B. $7,000. C. $10,000. D. $12,000. Answer: C. $10,000. Explanation: when a policy provides coverage on a replacement cost basis, the insurer will pay the full cost to replace the damaged property without deducting for depreciation. If the policy was on an SEV basis, the insurer would pay $7,000 replacement cost minus depreciation. Question 13. Topic: Liability insurance. Vicarious liability. Which of the following scenarios best illustrates vicarious liability? A. Homeowner is held liable for injuries sustained by trespasser. B. Company is held liable for damages caused by its employee during work hours. C. Driver is held liable for damages caused by their own negligence. D. Landlord is held liable for not repairing broken staircase. Answer: B. A company is held liable for damages caused by its employee during work hours. Explanation: vicarious liability occurs when one party is held responsible for the actions of another party. Typically in an employer-employee relationship, the employer can be held liable for the actions of their employees if those actions occur within the scope of employment. Question 14. Topic: Personal auto policy. Exclusions. Which of the following is excluded from coverage under personal auto policy? Damage caused by collision with an animal. B. Damage caused by flood. C. Damage to the insured's vehicle while it is being used for business purposes. D. Damage caused by vandalism. Answer: C. Damage to the insured's vehicle while it is being used for business purposes. Explanation: personal auto policy generally excludes coverage for vehicles used for business purposes unless specific endorsement is added. Coverage is provided for collisions with animals, flood damage, and vandalism under comprehensive coverage. Question 15. Scenario-based. Claims process scenario: Marion's small bakery. Customer slips on wet floor and breaks their arm. The customer files claim against Mary's business for medical expenses and lost wages. Which type of insurance policy would best respond to this claim? A. Workers' compensation insurance. B. Commercial general liability insurance. C. Business auto policy. D. Property insurance. Answer: B. Commercial general liability insurance. Explanation: Commercial general liability (CGL) insurance covers third-party claims for bodily injury, property damage, and personal injury that occur as a result of the business's operations. In this scenario, the customer's injuries would be covered under Mary's CGL policy. Question 16. Topic: Workers' compensation. Coverage: which of the following would be covered under workers' compensation policy? A. An employee injured during company-sponsored sporting event. B. An employee injured while commuting to work. C. An employee injured while engaging in horseplay at work. D. An employee injured during personal trip unrelated to work. Answer: A. An employee injured during a company-sponsored sporting event. Explanation: in many cases, injuries sustained during company-sponsored events are considered work-related and are covered under workers' compensation. Injuries during commuting or personal activities are typically not covered. Question 17. Topic: Insurance law. Rebating: which of the following actions would be considered rebating and is typically prohibited under insurance laws? A. Offering discount on future premiums for policy renewals. B. Providing potential client with small gift valued at $10. C. Offering portion of the producer's commission to client as an incentive to buy policy. D. Offering free consultation to discuss policy options. Answer: C. Offering a portion of the producer's commission to a client as an incentive to buy a policy. Explanation: rebating is the practice of returning a portion of the producer's commission or offering an unauthorized financial incentive to induce client to purchase an insurance policy. It is prohibited in most states to maintain fairness and prevent unethical sales practices. Question 18. Topic: Health insurance. COBRA coverage under the COBRA law. How long can an employee typically continue health coverage after leaving their job? A. 6 months. B. 12 months. C. 18 months. D. 24 months. Answer: C. 18 months. Explanation: the Consolidated Omnibus Budget Reconciliation Act (COBRA) allows eligible employees to continue their health insurance coverage for up to 18 months after leaving their job. In certain situations, coverage may be extended to 36 months. Question 19. Topic: Marine insurance. Inland versus ocean marine. Which of the following would most likely be covered under an inland marine insurance policy? A. Cargo ship traveling from New York to Europe. B. Commercial building damaged by hurricane. C. Construction equipment being transported to job site. D. Warehouse storing imported goods. Answer: C. Construction equipment being transported to a job site. Explanation: inland marine insurance covers property in transit over land as well as movable property and specialized equipment. Ocean marine insurance covers ships and cargo in transit over water. Question 20. Topic: Life insurance. Beneficiary designations. Which of the following statements about beneficiary designations is true? A. Primary beneficiary must be family member. B. Contingent beneficiary receives the policy proceeds if the primary beneficiary is still alive. C. Revocable beneficiary designation can be changed by the policyholder at any time. D. If beneficiary is not named, the insurer will select one. Answer: C. A revocable beneficiary designation can be changed by the policyholder at any time. Explanation: a revocable beneficiary can be changed by the policyholder at any time without the consent of the beneficiary. In contrast, an irrevocable beneficiary designation requires the beneficiary's consent to make changes. Question 21. Topic: Homeowners insurance. Liability coverage. Which of the following would be covered under the personal liability section of homeowners policy? Hothery. A. Medical expenses for neighbor injured by the insured's pet. B. Damage to the insured's own property caused by fire. C. Loss of personal property during move. D. Flood damage to the insured's basement. Answer A. Medical expenses for a neighbor injured by the insured's pet. Explanation. The personal liability section of a homeowner's policy covers bodily injury or property damage to third parties for which the insured is held liable. Damage to the insured's own property or flood damage is not covered under personal liability. Question 22. Topic: Auto insurance. Underinsured motorist coverage. Which of the following scenarios would trigger claim under underinsured motorist coverage? A. The at-fault driver has no insurance. B. The at-fault driver has enough coverage to pay for all damages. C. The at-fault driver's insurance limits are lower than the damages sustained. D. The at-fault driver leaves the scene of the accident. Answer C. The at-fault driver's insurance limits are lower than the damages sustained. Explanation. Underinsured motorist coverage applies when the at-fault driver has some insurance, but not enough to cover the full extent of damages. If the at-fault driver has no insurance, the claim would fall under uninsured motorist coverage. Question 23. Scenario-based. Professional liability insurance. Dr. Miller, surgeon, performed routine operation that resulted in complications due to an error in judgment. The patient files lawsuit against Dr. Miller for medical malpractice. Which type of insurance would protect Dr. Miller from the financial consequences of the lawsuit? A. General liability insurance. B. Workers' compensation insurance. C. Professional liability insurance. D. Business interruption insurance. Answer C. Professional liability insurance. Explanation. Professional liability insurance, also known as errors and omissions insurance or malpractice insurance for medical professionals, protects individuals and businesses from claims of negligence, errors, or omissions in their professional services. General liability insurance covers bodily injury or property damage but does not cover professional errors. Question 24. Topic: Health insurance. Pre-existing conditions under the Affordable Care Act account insurers are A. allowed to deny coverage based on pre-existing conditions. B. allowed to charge higher premiums for pre-existing conditions. C. prohibited from denying coverage due to pre-existing conditions. D. required to provide additional coverage for pre-existing conditions. Answer C. prohibited from denying coverage due to pre-existing conditions. Explanation. The Affordable Care Act prohibits health insurers from denying coverage or charging higher premiums based on pre-existing conditions. Question 25. Scenario-based. Business interruption insurance. Restaurant suffers fire that forces it to close for 2 months. During this time, the business incurs ongoing expenses such as rent and employee salaries. Which type of insurance would cover these ongoing expenses? A. Commercial property insurance. B. General liability insurance. C. Business interruption insurance. D. Workers' compensation insurance. Answer C. Business interruption insurance. Explanation. Business interruption insurance covers lost income and ongoing expenses when a business is unable to operate due to a covered peril such as fire. Commercial property insurance covers the physical damage but not the loss of income. Question 26. Topic: Surety bonds. Roles and responsibilities in surety bond. Which party is responsible for fulfilling the obligation if the principal fails to do so? Obligee. B. Principal. C. Guarantor. D. Surety. Answer D. Surety. Explanation. A surety bond involves 3 parties: the principal, the one who must fulfill the obligation; the obligee, the party requiring the bond; the surety, the party that guarantees the principal's performance and covers the obligation if the principal fails. Question 27. Topic: Risk management. Types of risks. Which of the following is considered pure risk rather than a speculative risk? A. Investing in stocks. B. Starting new business. C. Owning a home that could be damaged by storm. D. Gambling at casino. Answer C. Owning a home that could be damaged by a storm. Explanation. Pure risk involves only the possibility of loss or no loss. Speculative risk involves the possibility of loss, no loss or gain. G. Investing, starting a business or gambling. Question 20. Topic: Workers' compensation. Employer liability. Which of the following situations would not be covered under workers' compensation policy? A. An employee slips and falls while working. B. An employee is injured while traveling for work. C. An employee is injured during voluntary company picnic. D. An employee is injured due to their own negligence. Answer C. An employee is injured during a voluntary company picnic. Explanation: injuries that occur during voluntary social events are generally not covered by workers' compensation as they are not considered work-related. Question 29. Topic: Life insurance. Types of policies. Which type of life insurance policy provides coverage for a specific period of time and does not accumulate cash value? A. Whole life insurance. B. Term life insurance. C. Universal life insurance. D. Variable life insurance. Answer: B. Term life insurance. Explanation: term life insurance provides coverage for a specified period of time and does not build cash value. In contrast, whole life, universal life, and variable life policies have a cash value component. Question 30. Topic: Auto insurance. Comprehensive versus collision coverage. Which of the following losses would be covered under comprehensive coverage of an auto policy? A. Damage from collision with another vehicle. B. Damage caused by hitting pothole. C. Damage caused by tree falling on the car. D. Damage from rolling the car over in an accident. Answer: C. Damage caused by a tree falling on the car. Explanation: comprehensive coverage protects against non-collision related events such as falling objects, theft, vandalism, and natural disasters. Collision coverage applies to accidents involving other vehicles or objects.